Are you ready to break the accounting firm mold? This is the IssuesWatch podcast. Hi, I'm Don Meyer, Chief Marketing Officer at the New Jersey Society of CPAs, and welcome to the IssuesWatch podcast. A new book, Accounting for Times, journeys into the history of accounting and law firms. Drawing on the author's more than 2 decades of experience in organizational leadership and development, the book argues for the necessity of adaptation to thrive in today's business environment. Accounting for Times emphasizes the critical decision that firms must make: evolve or dissolve. Here with me to discuss Accounting for Times are the authors, Rachel Anevski, CEO and founder of Matters of Management, and Jessica Levin, president of 7 Degrees and COO of the Global Accounting and Law Association, Abacus Worldwide. Welcome, Rachel and Jessica.
Thank you.
So excited to be here.
All right, so Jessica, let's start with the question you posed in the introduction to the book. Why did you write this book?
There are so many reasons that we wrote it, but Rachel and I, first of all, we talked about writing a book together since probably the day we met, and we really thought it was going to be on the marriage between marketing and HR, but that was so many years ago, and our experience has changed and evolved, and the profession has evolved, and I finished my doctoral study last year and focused on culture in accounting firms. Rachel is working on hers on transformational leadership, and which, by the way, happened in the middle of writing the book. But we just realized, we have spent so much time, we say almost a half a century combined, working in professional services. And with so much changing in the world right now, it just made sense.
All right. So Rachel, who is this book for?
So it's interesting because managing partners are reading it, and I think our focus was for kind of like the next generation managing partner as one type of person to read it. I think it is for all the people that work in public accounting. It's evolving also to an area that could focus on academia. So students wanting to learn more about the history of public accounting and what happened, its metamorphosis, and potentially its future.
Really, if you want to really drill down to it, obviously we want everyone to read it that's in the profession, but we want people who understand the value in remaining an independent firm. And this is a tool to help them decide, but that's really the target firms or leaders or future leaders that know that they don't want to become part of one of the big machines, and they really want tools to be able to succeed as a small or even mid-sized independent firm.
For sure.
Yeah. And I'll add one other audience to your list of who the book is for. And I would say state CPA society executives and staff, because one of the things that struck me about the book was how many of the same conversations we're having inside the walls here at 105 Eisenhower in Roseland about a lot of the same topics that you guys brought up in the book. And one of those topics, that's my next question for you, Rachel. You and Jessica wrote, the next generation of professionals is redefining success. And the next generation of lawyers and accountants is reimagining success outside the confines of partnership. So is there a new end game for young professionals? And how do firms that have been in business for decades and had this partner structure for decades, how do they adjust to that new reality?
Well, I think that this is one of the reasons why my doctorate is on transformational leadership. To be able to take what's happening in the world right now, digital transformation, AI, different corporate structures, private equity, the changing CPA designation, all of these things that are kind of being talked about and thrown about. I think you have to understand what transformation looks like and then understand the model of change management and change leadership. Unfortunately, for most of our exiting partners, they won't have to necessarily withstand those changes, because the small incremental changes that are happening along the way will help these future leaders be successful in this new environment. And Jessica and I have had this conversation. We could talk about this for hours and hours on what we think it's going to look like, or what we hope it looks like, or how these young professionals are going to be able to independently stand on their own and have these great firms doing great things. But the firms are changing, the type of work is changing, the type of people are changing, and how we do business is also changing. So I think success absolutely looks different for our future leaders in a way that, and Jessica really puts a catalyst on this, talk about how to bring culture into the workplaces to kind of withstand all of these changing environment. It's very cool. It's very exciting.
And one thing I find interesting, I think it's not just about what young professionals want, or maybe they're not as interested in a partnership track as a professional would have been 25 years ago. We know that due to necessity, firms are promoting people to titles like director, even if they haven't passed the CPA exam. And you gave a great example pretty early on in the book about a managing partner who evolved not from tax, audit, or advisory, but from marketing. So, Jessica, could you explain a little bit about what you mean by the corporate model?
Sure. And I can talk a little bit about that example, because it doesn't necessarily follow the corporate model. It still follows a partnership model. And that's the person that we're talking about is Eric Mysak from Beach Fleischman, who's a good friend of mine. I'm actually going to have dinner with him in a few weeks, and we're looking forward to being all nerdy and talking about all of these things. He's somebody who became a non-CPA partner and became CEO of his firm, maintaining the traditional partnership model with a non-CPA at the helm, which is very unusual. We talk about a corporate model, which almost every other industry, not all of them, but follow, where not everybody is an owner. You have a CEO or president, you have a C-suite, COO, CMO, CFO, and then you have department heads, vice presidents, however that structure is, but not everybody is a partner. And people have different ownership, different incentives, and different authority to make decisions. And, we joke, working in associations, sometimes we know that management by committee is not necessarily the best thing. We see that in volunteer organizations. In partnerships, when you have, let's say, 20 partners and one might be in charge, but everybody has a vote, it's very difficult to get anything done. And I think we may have talked about this last time we talked about the partner I knew who said he felt like they had to vote every time they wanted to decide whether or not they wanted to change toilet paper in the office. Whereas a corporate model, and we do use that term kind of loosely, really has that really traditional structure that other businesses follow. And I think the most important part about that is that you have the right people in the right roles, rather than in a traditional law firm or accounting firm, everybody's an accountant, everybody's a lawyer, in these leadership and management positions where they might not be qualified. They might be the best at what they do. They might be the best tax professional, the best audit professional, but that does not necessarily mean that they're the best operations person, that they're the best even CFO, if their work has never really involved that type of decision making before. And so looking at this corporate model where you're really making sure, and and Rachel having a strong HR background, even having a CHRO, making sure that you have the most qualified people making the decisions within your organization.
Right person, right job.
Right person, right job. And it doesn't necessarily have to do with compensation. One of the challenges, pushback on the partnership, against the partnership model, is the partners are splitting the profits. But that doesn't mean that you can't be creative in how you compensate people. It's really more about being able to run a very productive and efficient firm.
The older we get, or the more used to something we become in it, we're that hesitant or resistant to change. This is a huge change. It's also like our peers are doing it, so we have to do it. It's also like it's always been done this way, therefore it should be done this way. I think we see a glimmer of hope with like the whole C-suite, because that mirrors the model. But even you see yourself, Don, when we're acknowledging that there's someone who's different at the helm, we think that that's corporate when the structure is still partnership model.
That's true.
So, so it's kind of like we're mirroring the model in some ways. It's like we're almost there. We're almost ready to do it. I think a lot of people in this profession, in legal and in accounting, need to see the other side of things first. They need to see that something is a tried and true, great thing to do, and then they jump ship and they'll conform.
All right, well, let's talk about some change that actually is happening. Let's talk PE and ESOPs. So for those of you who don't know, we're talking private equity and employee stock ownership plans. So let's start with you, Rachel, and let's get your thoughts on employee stock ownership plans.
Sure. So I love this. And I also will disclose that I'm not an expert and I'm not an accountant. So I'm going to talk kind of in generalities. So what happened with Jessica and I when we were writing this book is we wanted to find alternatives to stay independent. We really wanted people to understand that they didn't have to succumb to private equity. I mean, now your LinkedIn feed is all about private equity and public accounting. It is just every day someone's doing a conference, a panel, someone's, it's not new news anymore. It's like everyday news. And so in our research, we had found that there were some firms many years ago that tried this opportunity, and they had been followed for a very long time, and it was extremely successful. And essentially what happens, if I understand it correctly, which I think after having written about it, I know some things about it, is that in this model, while it's not an inexpensive way to go about things, I mean, it does cost some money. It's with banking and loans and things of this nature, it will allow your partners to leave tax deferred with their buyouts, right? So it kind of funds their buyouts, which eliminates young professionals coming into partnership with all of this debt. So that's one of the things that I thought was like just brilliant about it. The second thing is some accountants that I've talked to, partners, managing partners who never really thought to put ESOPs in their company. Some of them never even had the conversation about ESOP because it's not their expertise. Maybe it was an audit partner that became managing partner, so they don't know about ESOP, or it was someone who focused more on business development, so they leveraged the tax department, but they really didn't know enough about it. So it just never came across the top of mind for them. But in addition to this piece of tax deferred money, which is obviously music to most people's ears, is that it allows your employees to have skin in the game, to have an ownership level. So there's a retention component. This just seems to be such a great way to engage the employees to, if you're a firm that says we are an employee first firm or a people first firm, or if you really understand that your people are what drives your mission statement and your values and your culture, then I couldn't imagine, and I know Jessica's going to talk a little bit about private equity, I couldn't imagine choosing private equity. I could only go to ESOP. And that's my I've drawn the line. I'm in.
Well, that's a good lead in to my question to Jessica. So Jessica, is it fair to say in the book you're less enthused about private equity than ESOPs. Is that a fair statement?
That is a very fair statement.
Yeah.
And yes, we are less enthused about private equity, and for a number of reasons. And first of all, private equity, while it's fairly new to accounting, it's not new. And we've seen what happens when private equity firms go into other industries. So much so that US Congress is considering regulations to limit private equity investment in certain industries, because we're all in business to make money. But private equity, they're going into businesses as an investment, which is very different than somebody working in a business, building it, caring about it. They're buying in like you would buy stock in a company that you want to make money, and you don't really care about that company. You don't really care about the people there. So they're coming in and they're absolutely solving a need where the firms need cash for the same reasons that they would go ESOP for the retiring partners, because not everybody wants to become a partner now. But there's a number of issues we see. The majority of the private equity firms that are investing don't know the first thing about accounting. And while we want to change the model of accounting in general, you still have to understand that it's very different than any other industry. They're professionals, and there are people who have expertise in a very specific area. And they have certain personalities. Again, we're talking about evolution, so we don't want to be locked into that. But we have these investors coming in who don't understand that part of it. They don't understand the culture of the profession. So they're coming in and they're making changes that might work they might work in a manufacturing company, but they're not going to work in an industry that is already struggling to retain people. So that's the first thing, right? There is certainly value in some of the efficiencies that they can bring, putting things under one umbrella, maybe taking away some of the operational aspects that firms don't do well. But for the most part, private equity comes in, they invest in an organization, this is a generalization, and they get out, right? So they're not interested in the long-term success of a firm. They're just not, by definition. They want to come in, make money, and get out. And Rachel has talked about from a people perspective, if somebody is buying into your company of any kind and their goal is to make money and get out, that just does not mesh with being a people first organization. And professional services is all about the people. I mean, sure, technology plays a big role, but at the end of the day, we know it's a relationship business, and it just doesn't work, in our opinion, with private equity in the long term.
Let's move on to another subject that you also covered in the book. That's technology, specifically artificial intelligence. Larger firms, no surprise, have jumped on the AI bandwagon, but many other firms, and this is fairly typical, I think, of some mid-size and smaller accounting firms, they take a wait-and-see approach. So do you see AI helping with the profession's challenges around the pipeline and work-life balance? Jessica, let's start with you.
Well, absolutely. And I think firms are using AI and they don't even realize they're using AI. I mean, you talk to Siri on your phone and that is AI. So it is infiltrating our lives in a way that we don't even realize, because it's becoming so seamless. And firms are buying technology that uses AI that, again, they may not even realize that's what it's doing. They press a button, it does something. They don't understand the mechanics, and it's not their job to understand the mechanics behind it, right? As long as they're purchasing software or technology that does what they need. So I think that that's one of the things that we have to address, is that it's not necessarily this, you don't just go and buy AI, right?
Right.
You buy tools.
If only.
Right. And so absolutely, it's going to help. I don't want to use the pipeline issue, It is going to help make work more efficient. It is making tasks shorter. Even ChatGPT, you can take a bunch of data and turn it into a spreadsheet in seconds. Something, right, that's not an extra tool, right? It's the publicly available ChatGPT, but somebody may have had to spend hours, and I personally have done this, right? Spend hours formatting a spreadsheet just to be able to import it, where ChatGPT can do it in seconds. So as the technology gets better, absolutely it's going to fix the efficiency issue. Now, will it fix the mindset issue, right? Because it's okay, well, it's faster, so we could do more, and we could keep piling work on people, right? And that's a very different issue. That's beyond the zeros and ones behind the technology. It's about how you're looking at it. I've always been a big believer that, right, technology is just a tool. It's not the end all be all. It's just like using a pen, right? You don't build your entire organizational strategy around using a pen. You shouldn't be thinking about AI that way. It's just a tool that is going to ultimately be a part of everything that we do.
It's a means to an end, not an end in itself. All right, so one last question for both of you. The need for change in accounting has been discussed since the first baby boomers started retiring. It's probably 15 years ago. But let's be honest, progress has been somewhat limited. So Rachel, let's start with you. You alluded earlier, you think we're at a tipping point. What will it take for accountants and firms to evolve like you discuss in the book?
Right. So Jessica and I really tried to show a larger picture. A lot of people who we use the model. She must have hated me for saying this so many times. Whack-a-mole, right? We fix one problem, another problem, pops up, and that's kind of what we see consultants are doing in the industry right now. They're taking one problem and they're trying to silo that one problem, cap it off, and then move on to the next problem. And that's one way to do it. That's a strategy, but it really does need a larger community dedication, if you will, because there's not just one problem. It's a strainer full of problems. And so really, truly, in order for change to happen, is we need to take a sample of firms, change the model, have them all commit to the model, live the model, breathe it, be by example. And I think that behaviorally, this industry really requires a lead by example model. But we can't continue to say this is the best way to do it and then just leave it out there. We have to actually get some commitment from some kind of splice of sampling and make those changes, live them, breathe them, and show how they're functioning and working.
Okay. Jessica, what do you think? What will it take for accountants and firms to evolve?
I think it's going to depend on the firm. I think that what we're going to see are the firms who are have merged. We're going to see, and we're starting to see a little bit of this, the people who work in those firms who have been acquired and they still want to work in a CPA firm, breaking off and starting new firms because they don't want to work in these giant machines. And there are absolutely people who do. So I think that's one aspect, is that, that something bad is going to have to happen to them. And I don't mean, tragic, but they're going to have to go through some things. I don't see anything else other than, sure, there are people who are, ambitious and want to change for the sake of being forward thinking, but generally something has to happen. Either they're going to run out of money, they're going to just have an absolutely impossible time hiring people, or their firm that they are in is going to change because of leadership, because of acquisition. Those are the types of things that I think are going to make them change. I also think, and we allude to this in the book, and will tell you it's a fine line. You know, you're the New Jersey Society of CPAs. I think that the entire definition of an accountant, or even the concept of an accountant, is going to need to change drastically. And what an accountant does, what we're calling an accountant, is what they're doing today is going to be such a small part of what is needed, especially by businesses, right? Individual taxes, I think, that's still a small part of what the general profession does. But businesses need so many different services, and they need experts who can guide them. And that is not going to go away. And it's not necessarily going to just be the work of doing taxes and doing financial statements. It's the bigger picture. And those professionals who can do that are going to be the ones who thrive, even if they create firms where they bring those areas of expertise together. And so I think that what we're calling accounting firms now, and we know that there's accounting and consulting, they've added that. We know that firms are splitting their divisions, but I think what that looks like as a firm, that is going to change because of the needs of the clients, especially from the business side.
Yeah, I mean, we learned, and you know, Jessica and I have been doing some speaking engagements, and we certainly learned that, you know, a lot of people feel that accounting firms aren't accounting firms anymore. They're technology firms, and they're providing accounting services. So, you know, there's a grassroots movement already happening where people are feeling this and living it. You know, we're certainly seeing changes. And I think it's so true. I echoed, you know, Jessica's opinion that the definition of accountant really needs to be revisited because it has evolved, it's changed, and it will continue to.
Yeah, I think change will come. I guess my big question is whether it's going to come internally, meaning from the profession itself, or whether there's going to be some sort of external force. Could be economic, could be regulatory, legislative. I wonder where that enormous change is going to come from, or I guess it could just be incremental and happen over time. And the next thing you know, like you said, the definition of accountant has changed. But we'll have you back for that discussion. But in the meantime, thanks again for joining us to discuss the book. It's Accounting for Times. Thank you again, Rachel and Jessica. Really appreciate it.
Thank you so much.
Thanks for listening and watching. Find out how to purchase Accounting for Times and connect with Jessica and Rachel at the links in the show notes.